Okay, welcome to our fantastic webinar, The Markets Have Gone Mad. This is a very special event. I'm Louise Bedford, my business partner is Chris Tate, and you are in the right place at the right time. Now, we do have a lovely evening planned for you. The markets have gone completely crazy, and I'm looking forward to giving you some of the answers that you deserve. Now, I'll just make one little technical adjustment before we get going. There we go, we're all set. Alrighty, it's nice seeing so many people join us. It is crazy out there. You know it and I know it. If you've been watching the markets lately, you'll know that it has been absolutely mad. Now, I'd like to remind you that Chris Tate and I are licensed for general advice. We won't be providing specific advice tonight. And if you'd like to read every single word of that, you're welcome to. But just know that everything we say is of a general nature and doesn't take into account your specific objectives, financial situation, or needs, which I'm sure you have seen in the past. Now, let's get right to it. It's officially been the worst start of the year for the global equities market recorded. That's right, it is the worst start to the year. It has been the worst January ever. February wasn't much better. What in the heck has happened? Have the markets gone completely batshit crazy? I'm Louise Bedford. Together with my business partner, Chris Tate, we're going to delve deep and share our views on what is happening in the world. And also, more importantly, we're going to tell you how you can make a buck out of it. You see, wherever there is confusion, there's also opportunity for those in the know. Chris Tate and I have some freaky trading insights that we'd like to share with you today on this webinar. We're going to give you everything that we can in the time that we have available, and then I'm going to tell you how you can get more information at the end of this webinar. So let's just make sure that you're in the right place. This webinar is for you if you're sick of treading water and slipping backwards in your share market returns. Or maybe you can see a whole heap of other traders out there treading water as well and not getting anywhere, and you don't know where to turn to get you out of this mess. It's also for you if you've been looking at your charts and just scratching your head and wondering why things are so damn crazy at the moment. Or maybe you can taste trading success, but you just don't know how you're going to achieve it. You know, there's some mad stories around at the moment, and maybe you're pretty sure that others are finding hidden pockets of money in the markets, but you just can't seem to find where those dollars are, how you're going to get them to drop into your lap. If that sounds like you, then you've got to stick with us through this entire webinar, because the basis for your escape from this situation is buried within it. By the end, you'll gain insights into the markets that you won't be able to get through any other source. Look, I want to tell you that if you've been losing money, it's not your fault. Don't spend another minute blaming yourself. I think so often we get ourselves tied up in self-worth issues with the markets. It's our goal to help you not only trade confidently and safely, but we want to put money into your pocket and make it stick. We have helped thousands of traders, people just like you, so we are confident that we can help you as well. Our last trip to Perth shocked us to our core. Now, I don't know where you live in WA, but we went right the way through the central part of Perth and we saw lots of signs going out of business. We saw businesses shutting up their shops. We saw loads of for lease signs. Now, I have relatives in Perth and it shocked me. I have beautiful traders in Perth that we've trained in the mentor program that we've been running continuously since the year 2000. but nothing prepared me for what I saw. Your prices seem so much more expensive than Melbourne, where Chris and I are based, yet we see people struggling with, so we saw them struggling through the whole mining decline. We see people looking for an alternative to the fly in, fly out situations that they found themselves in, as well as looking for alternatives to the usual employment grind. It's pretty clear that the decline in the mining industry has really hit WA hard. And it was also pretty clear to us that loads of people didn't realise that the seeds to their escape just needed to be planted so that they can grow. Out of every adversity comes opportunity. And that's why we're running this webinar tonight. A lot of people on our last trip didn't seem to know that the solution to their trading and their situation was just around the corner. Well, really, it's in the disguise of 2 trading mentors, and we're happy to show you how to get the results we have achieved ourselves. What we're looking to give you is a more confident way of relying on yourself to make a life, rather than relying on a boss to make a living. So let me tell you a little bit more about the 2 of us. So clearly I'm the one with more hair just there, and Chris Tate is also known as the big bald bloke. He's standing beside me. I was the manager for a credit information company for many years. Chris Tate was a scientist and then later a broker. And between the 2 of us, we have nearly 50 years of experience. Plus, as you probably already know, we're both best-selling authors of books on the share market in our own right, and we've been full-time traders for decades. Coming up in just a few months, I will have been trading full-time for 20 years. I've been trading longer than I've ever had a job for. So the thing is, we don't want you to go through every aching step that we had to go through. We've traded our own personal accounts, and we still do, and we know that the strategies and the techniques that we share can be implemented not only now, but will also work in the future, because our techniques have stood the test of time. And also, we've taught them. We have slashed the learning curve of thousands of traders, and we can do the same for you. So whether you are starting from scratch, or whether you are a professional trader, we have trained people in your situation. Now, just to give you a bit of an idea how long we've been trading, the proof is definitely undeniable. We started trading before Bob Hawke was Prime Minister. We began trading when TV shows like Dynasty and Dallas were compulsory viewing for the entire family. We are here for the long term. We are solid. We know our stuff. We have our own Australian Financial Services license, and we keep up to date with professional development. And we do produce outstanding, back-tested, audited trading results. Now, I'm going to hand it over to Chris Tate. He's my business partner. He is my friend and my fellow trader. And unlike the people in this picture, he is the man who has had the same hairstyle since the 80s. Can you please welcome Chris?
Thank you, Louise. Evening, everybody. My job for the next few moments is to try and put some sort of spin, some sort of perspective on how global markets have started this year, but also to look at the opportunities that actually arise from that. The quote you see here, global stock markets have suffered their worst start to the year since the Great Depression. This is actually a quote from the Telegraph in London, and it very much sums up the sort of general feeling of equity markets towards the end of January, the start of February, because all world markets did get off to a very, very ordinary start, and they have struggled since. The interesting thing about that is, and to use the old hackneyed sort of poorly interpreted Chinese phrase, that crisis brings opportunity. And there are always opportunities whenever you get markets moving. And in terms of what happened in January, you can see who the culprits are. Most of the blame for what happened in January was sheeted home to Chinese markets. To a degree, this intrigued me, and it intrigued me because we have known for some time that China is stuffed. There is nothing new in that. So there is nothing unusual in that. So we did have this somewhat of an overreaction. There's two other things on this little graphic that I find interesting. The first is the performance of our market, which is neither here nor there. It is a poor start to the year, but it is certainly nothing to throw the baby out with the bathwater. The other surprising thing on this was the performance of the FTSE 100. The FTSE 100 is a very moribund index. It hasn't gone anywhere for a considerable period of time. It's been range trading for ages, and it is certainly under pressure at present with all this talk of Britain leaving the European Union. The English still seem to be under the mistaken sort of opinion that A, they have an empire, and B, that they are a world power. What they sort of fail to realise is that they're a third-rate power even within Europe. But nationalism is an interesting thing. The issue about it is that there is a lot of mythology around January and what it means for the rest of the year. Well, we have a slight technical difficulty. There we go. There is a thing known as the January effect. The January effect, in short, that as January goes, so too does the rest of the year. The thinking being that if January is down for the month, you will follow suit, and equities markets will have a down year. The thing about this is it doesn't actually tell us anything about trajectory. All it is a bold pronouncement. If January is bad, the rest of the year is bad. That doesn't help us in any way, shape or form because it doesn't tell us anything about the journey the market might undergo in reaching that point. It's also a bold piece of mythology that is really only good for people who buy equities and hold them forever. It's of no use to people who actually trade. And so it doesn't present us with any sort of information. And in terms of looking for evidence of the January effect, there's lots of talk about it, but there's actually very little hard evidence. The unfortunate thing about trading, about investing, and I use the two terms interchangeably, is that a lot of the things that are taken to be fact actually have no evidence behind them. Things like dollar cost averaging, things such as you should always be in the market. These are little myths that we've inherited for which there is very little evidence. So I got this little spreadsheet together, and it
You're
looks
good with
at,
your spreadsheets, Chris.
It is. And it looks at S&P 500 data going back 60 years. And it looks at January's gain and what happened the subsequent year. And it found that on the basis of the data I put into it, that January did predict the outcome of the year. But again, it doesn't tell us anything. And there are some notable missteps in this market, in this approach. It missed 1987. It missed 2001. And it doesn't give us any idea of the quanta of the movement. We have no idea of the dimension. And that is problematic because as traders, numbers are effectively the cornerstone upon which we build any form of trading system or any form of idea. And in terms of looking at the fact that this doesn't tell us anything about trajectory, I went back and looked at this handful of markets on a year-to-date basis. So this is up to date as of last week. And you can see there has been a change. China is still ordinary, but other markets have begun to improve. So again, we're caught when we make this pronouncement. It doesn't help us to deal with the changes that occur in markets. And all we're looking for is change. And so unless we know or have a mechanism of looking at markets and seeing which markets are changing, which markets are moving, we really are quite stuck and quite limited in the judgments we can make. And this brings me to the first point I want to make, that all markets need to be evaluated on their merit, but their merit must be data-based. You can't, for example, cling religiously to the notion that you trade Australian stocks. And the reason that will become apparent, I'll give you in a moment. You really, really have to have a broad focus. You cannot have a narrow focus in terms of diversification of markets. Even diversification across equities markets is problematic because when global trends occur, they involve all markets. That's why they're called global trends. They're not secular in nature. The contagion spreads across markets. When China began to fall apart, it dragged every global equity market with it. It wasn't confined just to China. And so you can't have this sort of approach that you deal only in idiosyncratic markets. You need something broader, something wider, which means you actually have to get into the habit of learning how to follow the money. And that's simply all you do as a trader. As a trader, you follow the money, and it doesn't matter where that money is. That money may at some stage may be in Australian gold stocks. It might be in the energy complex, in commodity markets. It might be in a given currency group. But you need a mechanism of recognizing it, a mechanism of actually finding it. And the issue with that is that you have to do something unusual and something that most people are not used to. And that is you need to do your own thinking. You have to find your own way and your own path. You can't blindly, for example, accept what we laughingly call the BHP strategy, which is buy, hope and pray. Mm-hmm. You actually need to do some thinking about where and how you're going to trade, where and how your money is going to go. But this more often than not leads you to be slightly different to others. You have a different perspective, a different approach. There are a raft of psychological difficulties with that which are beyond the remit of this short talk. But for those of you who've undergone this process, you understand what I'm talking about. Now, in terms of market mythologies, I'm going to present my evidence as to why the notion of stock selection, now let me rephrase that, instrument selection is flawed. In my world, in my view, stock selection or instrument selection is the least important part of the trade selection process.
But that's the one that most people focus on, isn't it, Chris?
It is. That's why people sit there applying thousands of indicators to their charts, listening to whatever talking heads say on TV, and buying copies of the Financial Review. Stock selection is not important. It is actually market selection. Now, that's a fairly bold pronouncement. And in the world I come from my original profession, you couldn't make bold pronouncements without some sort of evidence, something to back up what you were saying. Because my world used to be an evidence-based world, unlike financial advising, which is largely a touchy-feely mythology-based world. And to give you an example, this is a testing protocol we've run several times. It compares two baskets of stocks, the ASX 200 and the S&P 500. Covers 11 years of data, and it has random entry.
I was asked the other day how many stocks are in the ASX 200.
And that's not surprising. For those of you who read my blog, you will be aware that somebody once rang me when I was a broker wanting to list their house on the stock exchange. But that is the strange, weird, wacky world of having been a stockbroker. This system has a volatility-based trailing stop, fixed position size of $5,000, 50% margin if possible, and a total capital of $100,000. When we ran this test, it produced a very, very interesting equity curve. When you run a systems test, all the data in the world is meaningless unless it generates an equity curve. Because an equity curve shows you what you would have made in terms of closed equity. There are two curves on this chart. The blue one is of the ASX 200. The red one is of the US market. And something interesting occurs. Before the GFC, our local market substantially outperforms the US. Post the GFC, the US market just takes off and we remained largely locked in a sideways trend for years. Now, in terms of what this is telling me, we need to go back and look at the testing protocol. And the testing protocol has a standout feature.
That standout feature is random entry. So rather than this being a system where the entries are forecast by a computer model or even a person inputting those entries, this was chosen randomly.
So what the system has done is it's testing the impact of markets. It's not testing the impact of whatever entry signal you're using. So it is comparing what effect simply being in a market has upon your returns. So market selection is the most important part of the trade selection process. By far, being in the right market at the right time is of utmost importance to traders. But this raises the question of which market and when. To answer that question, you actually need to start to look at what markets are available. The ASX has a daily turnover of about 4 billion. The commodity futures markets have a daily turnover of about 450 billion. So we're 2 orders of magnitude removed. We're much, much bigger. And FX markets run on average at about $4 trillion US per night in turnover. Pardon me. So you have a strict hierarchy of markets. And the issue is, given this strict hierarchy, which ones do you trade? Which ones do you look at? Now, there's a few tricks. I'll talk more about these in depth when I'm in Perth. But there are a few little things you can do. You could use the CRB Commodity Index, which is a futures contract, but you could only use that in certain circumstances because it's a weighted basket of commodities. You need to know its structure. Likewise, with currencies, you could look at the US dollar index, but again, without actually understanding the construction of the index, you could look at this and make the wrong pronouncement as to which currencies were moving against the US dollar. You could just assume all of them were. But that's not the way this index works. The other tool you can use, and this is actually a favourite of mine and members of the Mentor program, is a tool like FinViz. FinViz offers a range of services, and what it's done here is it's generated the year-to-date relative returns of a series of instruments. And there's something interesting about this. This distribution here resembles what's known as a volatility smile. If you turn this horizontally, it looks like a smile. And for traders, this notion of a smile in terms of relative returns is very attractive because you have wings on either side. And the wings on either side represent large movements. And the one I want to concentrate on is gold and silver up the top. I'm not so much interested in natural gas down the bottom, because natural gas down the bottom is a continuation of an existing collapse within the energy complex. It's important for traders who are already within that move, but it's not a change, it's a continuation. And I'm interested in change. And the change that is occurring that interests me is in the precious metals. And year to date, it has been their performance that's been very, very interesting. So tools like FinViz start to give you a hint as to where you should be and what you should be doing. But following the money means trading more than one market, trading more than one instrument. And I want to quickly go back to FinViz because it does something interesting. In terms of telling you that gold is moving, that's all well and good. That's a green light, if you want to think of it in that respect. But it doesn't tell you which instrument to trade. That's a more complex question that we have to answer. Because knowing that gold is moving means that you could trade gold futures, but that might be beyond the size of your account. You might, for example, have an account that is too small to trade futures. So you would be directed towards gold shares, but you need a mechanism for selecting those. And to gain leverage on gold shares, you might want to look at exchange traded options. So from a single piece of information, we can work down through markets to find a tradable opportunity that suits every account. But as a final point, and this is the one I really want to sheet home this evening, is that trading really is about being in the right market at the right time. Everything else is superfluous. And it's superfluous for a very, very simple fact. As traders, the majority of your profits for a year come from one or two trends during the year. And if you have missed those trends, if you've missed those features, then your year is done. So you need a mechanism by which you can identify which markets are moving, and in turn, which instruments within those markets actually suit your investing profile.
Now, I know that we've got Scott Lowther listening in the background here. Scott, I've just been receiving a couple of messages that a few people have had trouble logging in. Now, if that's the case and you've missed some of this webinar and you've just been able to get on now, just be sure in your heart that we will record this for you and we'll send it out to everybody who has registered. So hopefully that will get to everybody and it will make a lot more sense that way, and you can review that in your own leisure. So I guess where Chris is coming from is stock selection is just one issue and market selection is really where the money is. If you can be nimble and shift your money between the markets so that you're following the money and you are raiding the markets for when that money is evident in that market, you'll be in a much better position. It's something that very few people consider. So, where does trading fit for you? Do you feel a bubble of excitement deep in your gut that maybe, just maybe, you've discovered what you're meant to be doing? Have you gained an inkling that even though this sounds like it could be a bit tricky, if you decided to go this with our support, that this is something that you could really immerse yourself in? But have the recent market shenanigans left you a bit shell-shocked and not sure where to turn? Look, I wouldn't be surprised if all of these conflicting emotions were running through your brain. Certainly, I think it's extremely human. The markets have gone mad, that is for sure. The thing is, though, there is money to be made in all of that confusion, but only if you know where to look. Now, Chris and I have been training traders since, gosh, Chris was involved right the way through the 80s. I got involved mid-90s and beyond. Here are just some of the traders that we have trained. Our traders know where to look to find the money. They've developed independence. They carry that knowledge around in their head. So regardless of where they decide to live in the world, whatever their changing circumstances are, they always know that they can make money and they can raid different markets for that cash whenever they need to. Now, we want you to join them. We have an exclusive one-day event called The Markets Have Gone Mad in Perth on April 16th. I have got a ridiculously terrific offer for you. This is something that we have never done before. We have got a custom-made, right up to date, here and now presentation for you. This one-day event in Perth only on Saturday, April the 16th. Now come along and you'll discover which markets to trade right now, as well as a step-by-step roadmap to show you what to trade and when. And if you're out of the markets, we'll show you how and when to re-engage. That is such a critical thing. We'll also give you trading triage. We'll show you how to jump out of the fry pan without getting burned. I'll give you psychological mind tricks based on my 4 years of my psychology degree to get you performing at the top of your game, even if you've suffered a few knocks in the past. We'll also show you when to re-enter the Aussie markets and what to trade while you wait. We want you to chase the money, and we know it's within your capabilities. When that turn does come along, it's most likely it will be hard and fast. After a steep descent in the past, it's not uncommon for the markets to jump up straight away 30, 40, sometimes 50%. Are you ready to make the most of what lies ahead? We will show you exactly how to do just that. So instead of feeling alone and confused, you'll feel confident and ready for action. That's what we want more than anything for you. Imagine how much better your portfolio could look when you finally work out how to trade these types of volatile conditions and how to profit. When every trade you take is based on a logical, methodical process that has given huge numbers of other independent traders an edge in the markets. The confidence that this one-day function will give you will absolutely astound you. And now it's your turn. Let's get into how this will work. I want to give you 12 months of support after this one-day function. So often you're left in the lurch, you're not quite sure about how to progress, but with these 12 months of support, you'll get these 2 bonuses to help you along the way. First of all, for free, you'll get 12 months of Trading Game Forum membership. It's valued at $320 per year, and it's your secret weapon in the market. It is your hotline to me, as well as Chris Tate and so many other traders that we have trained. Any question that arises will be there for you. The other thing that I'll be giving you is another amazing free bonus called Talking Trading Gold. It's valued at $297 for the year, and you'll get a full 12 months of this. How it works is you're going to get a 1-hour recorded interview so that you can make the most of your downtime, whether you're in the car or going to the gym. Maybe you just want to pop it on the iPod and listen. That is the way, continual ongoing support, that is the way to become a professional trader. And think, just one idea, one tip, and you could easily recoup your investment many, many times over. If you're already a Talking Trading Gold member, I'll completely understand, and we'll find an equivalent resource to give you, and I'm sure that you'll love that as well. Now let me tell you about this webinar special that I have just for you. Now the full event cost is $597. Even early birds will pay $497 for this one-day event, plus the 12 months of support. But because you've joined us for the webinar or you're listening to this webinar recording, I know you're an action taker and you can save yourself a bucket load. Book in by the 20th of March 2016 and you'll pay only $397. But to do that, you're going to have to listen super carefully because I've got a secret code to give you. Your secret promotional code is MGM. Write that down right now because you're not going to be able to get that massive discount unless you write down MGM, Markets Gone Mad. Now that is your code that will also qualify you for $617 in bonuses. So you'll get Talking Trading Gold for 12 months. You'll get our forum for 12 months. And you'll get the one-day event that we are running in Perth. Now, how to access this, you go to tradinggame.com.au/Perth. What you're going to do is click here to get started. When you see that on that page, click here to get started. Click on that button and then fill in your details. See that promotion code? Do you have a promotion code? Enter it here, enter MGM and click on use code and instantly you'll get a $100 discount applied. So right now you are at a crossroads. One way leads to the same old, doing whatever you've been doing up until now, getting the same results. What we want you to do right now is to take the other road. The other road will lead you to find out which markets you should be trading and when. It will give you a transformation in your trading business. Not only will you have Chris Tate and I there for the full day in Perth by your side, you've also got us for 12 months to make sure those lessons cement. We want you to take the other road to a new outlook, a new confidence, a new way of trading the markets with our full support on our one-day April 16th Perth event. You know, I was trying to work out, if I was in your situation, how would I handle this? What would I do? You know, you don't want to be that guy or girl who says, yeah, I had a shot at being a great trader, but I didn't take it. I really wish I had it. You know, people always ask, so when are you going to run another seminar? We haven't been to Perth for over a decade to run a function like this. And I've got news for you. How do you even know that we're going to run another? You know, people forget that we've been doing this for one heck of a long time. We have our beautiful bunch of mentorees that we love to hang out with, so we don't always take on traders from other walks of life. It's easy to forget that people retire, or they lose interest, or maybe they lose the desire to travel. So if you're putting off attending because you think we'll be back next year, you may be sadly mistaken. You can do more, be more, and have more. You just need someone to show you how. This is your year. This is your event. Book into our Markets Gone Mad one-day event now so you won't miss out. And we can take some of the mystery out of the game for you. Go to tradinggame.com.au/Perth and remember to enter in your special promotion code MGM so that you can cash in on the $100 off our already massive early bird price. Book in now. You'll also get $617 worth of value and a full 12 months of support. That's where you need to fill in the code MGM. Now, we have had a lovely time with you tonight. There are so many pieces of information that we've shared, I know, and I'm looking forward to getting to know you much better on April the 16th in Perth. Best of luck with your trading, and we will catch you around the traps at the Markets Gone Mad function. Thanks and bye for now.